Ladies and gentlemen, I'm very happy to welcome you to our panel on access to finance and recovery. My name is Astrid Bartels. I'm a Deputy Head of Unit for SME Access to Finance at the European Commission, and I will be your moderator today. I would like to point out that this panel will not deal with COVID crisis measures. Even though it's a very deserving topic, it's been discussed earlier today during another panel. We here will be turning towards the future and the European recovery. The European Parliament and the European Council have agreed just last week on a gigantic recovery package to the tune of 1.8 trillion euros. Part of this recovery package will be spent on SMEs. And our panel today will discuss the future direction that this SME finance support should take. To frame the debate, I would like to refer to the SME strategy for a sustainable and digital Europe, which the European Commission adopted on the 10th of March, literally just days before large parts of Europe went into lockdown. The Commission is of the view that this strategy is now more valid than ever, not despite, but because of the COVID crisis. The European Green Deal is the overarching policy of the European Union, and the mastery of the twin transition towards a more sustainable and digital economy is the goal. The COVID crisis has shown us how important it is to master the twin transition. The strategy is emphasizing the need to support SMEs in this transition and to make our SMEs more resilient. And one of the pillars of the SME strategy is access to finance. The key challenges that we as policymakers have identified are the following. We continue to have a major SME financing gap in Europe, despite the fact that there are a number of EU and national support programs, without which the gap would be even bigger. On the debt side, we estimate this gap to be about 20 to 30 billion per year. And that is without considering the significant investment needs we have to support the twin transition. We also know that SMEs in Europe are heavily reliant on the banking sector. About 90% of their external finance is bank-based, and such finance is obtained nationally. Cross-border finance is almost non-existent. So there's a need for a more diversified funding market and for much more capital markets-based instruments. Equity finance is very relevant, especially for highly innovative and fast-growing enterprises. But in Europe, only 10% of SMEs consider it to be relevant for them, and actually only 2% use it. And we know when equity finance is provided, it is mostly flowing to male founders, even though women launch about a third of companies in Europe. Overall, the European venture and private equity market is still relatively small compared to other regions of the world, for instance, the US, and the market is also largely fragmented along national lines, although it has developed considerably over the past decades. So against this background, the SME strategy focuses on reducing the debt and equity finance gap in Europe, on channeling more finance into projects that help SMEs with the twin transition. It focuses on providing more finance for SMEs that are active in areas contributing to union objectives, for instance, in the area of deep and green tech, in space, innovation, and the culture and creative sector. And it focuses on supporting gender-smart investment. The strategy calls for providing alternatives to pure bank finance and for supporting initiatives that help building a more integrated European capital market and that crowd in private investment. Ladies and gentlemen, much needs to be done to put the strategy into practice. And I'm very pleased that we have a group of excellent panel members today to discuss the future financing needs of SMEs. Let's see how we can work together to put the strategy into practice and the recovery funds to work. Before we begin our debate, a small announcement. I will start by asking each panel member to introduce themselves. You in the audience are invited to raise any questions you may have. Please post these questions in the chat function. if you want to, you can already indicate when you post your question who of the panel members should be answering. So let me now turn to our first panel member, Mr. Rudy Aernoudt. Rudy, can you please introduce yourself, the organization you work for, and your area of interest when it comes to providing access to finance for SMEs?
Thank you, Astrid. So my name is Rudy Aernoudt. I'm a senior economist at DG Grow. I'm dealing with access to finance, SME policy, space, and foresight. And besides that, I'm Professor of Corporate Finance. I published a lot about business angels, venture capital, and that's in fact my big dada.
Wow, thank you very much, Rudy. Very insightful. And we see you have a lot to bring to the table. Rika, could you now please introduce yourself next?
For sure. I actually have a few presentations here, but I have difficulties to have them on my big screen at the moment. So even though we rehearsal, just a second. All right, here we go. Can you see it?
Yes.
Good. So thank you, honored to be here. And the topic of my presentation here is an introduction, is that modern fundraising in the making. And my name is Riikka Koskemahi, a hard name to pronounce, I know. I am a CEO and Deputy CEO of Investor. I was planning to shortly introduce myself and then the company and what we actually do. So I joined Investor 2018. As I said, I work as a COO here and as investment committee chairwoman as well. Before I joined Investor, I'm one of the founding partners of Finland's first Media for Equity fund. It was founded in 2015. We have 20 portfolio companies at the moment and 3 exits already. And before that, I have several years of experience of working with the Finland's SME sector. And then Investor itself, we are MiFID licensed investment firm. MiFID means that we operate with transferable securities like shares and bonds. Investment firm in our case means that we're not investing ourselves, but we are publicly offering the shares and bond to be subscribed through our platform. We are a pan-European platform and target companies at the moment we are taking from the Nordics and from Germany and Austria. Basically, we could take them all over the Europe, but in those regions we have the teams in place. Investors comes all over the Europe, mainly of course in Finland at the moment, since we have been operated from 2012. So the biggest investor base is still here in Finland. Headquarters is in Helsinki, and offices we have in Berlin and Vienna. And just a few figures here that we have raised over 160 million through our platform, 200 plus successful funding rounds so far, 20,000-ish investors, and operational in 6 countries. But what we actually do is that we offer a fully digital investment process, meaning that all the materials are in one place in our platform, and that investors, once they have the profile created and we have known them, they can do that. We have done the KYC processing and stuff. They can invest through our platform fully digitally, meaning that the subscription process goes digitally, and also the signings of the shareholders agreements and everything. And after the round for the companies, we have the cap table management tool where the all the new shareholders can be managed in one place, and also the communication to investors can be done through the cap table management tool. And here's just quickly the products that we do: equity, basically shares, convertible bonds, and bonds. And what we are trying to build here is a ecosystem where all the cool companies from all over the Europe and investors from all over the Europe can meet and come together and have a really good ecosystem ongoing. And last but not least, let's connect. So if you have any questions, or you want to share something, or you want to just Slack me, but send me a LinkedIn message or an email. Please feel free. Thank you.
Okay, thank you, Rika. That was very interesting. Thanks for presenting the profile of your company. I would now like to turn to Silvia Manca from the European Investment Fund in Luxembourg. Can you please introduce yourself and tell us a little bit about the company you're working for? Silvia, the floor is yours.
Absolutely. Astrid, thank you very much. Pleasure to be here. Actually, today, it is a very important date for me because it marked my 12th anniversary with the European Investment Fund. So it's a kind of a celebration. And I have, when I was preparing for this panel, I was actually thinking that I'm myself the daughter of two entrepreneurs. So I've been witnessing myself the struggle, the suffering, the toil, but at the same time, the rewarding, the passion, and the talent that goes into this activity. So I'm actually on the earth almost on a mission because, as probably the majority of the audience knows, when we talk about the European Investment Fund, which is part of the European Investment Bank group, we are talking about financing and support to small businesses and notably to small and medium-sized enterprises. So how do we make the link between the EIF and the SMEs? Well, as you probably know, we don't finance SMEs directly. That means that we channel our intervention via a variety of partners that could range from venture capital, private equity fund, business angels, down to the credit spectrum, commercial bank, ethical banks, microfinance institutions, other type of alternative lenders. And we channel these funds with the idea on one side of sharing and bearing some of the risks that these intermediaries cannot actually bear vis-a-vis the market. On the other side, to multiply the resources that we channel into the real economy. Just to give you an example about the figures. Last year, in 2019, we entered into roughly 10 billion of commitment into this type of financial intermediaries that in turn generate more than 5 times of resources mobilized. Now, how do we intervene in the market? As we know, the model of the EIF is a mandate management model, and in fact, this is the team where I work in. In a nutshell, it means that we manage resources on behalf of third parties, the European Commission, the European Investment Bank, member states, national promotional institutions, and more recently also private investors. And we channel these programs into relevant policy areas. I was having a look out of curiosity about our press releases issued over the past 2 weeks, and just to give you an idea about the magnitude, the variety of sectors in which we operate thanks to this program. For instance, we issued under the COSME facility, there was a press release for support to Icelandic SMEs, support to culture and creative industries under the CCS, under the EASY program, support to financial intermediaries in the field of social enterprises, support to artificial intelligence, blockchains, and in general, innovation in the European ecosystem, a blue economy fund that we support in Portugal, and so on and so forth. So you might be familiar, friends in the audience, with the various acronyms that we like to use, like FC, COSME, Innofin, EASY, CCS. These might sound like dry names from the outset, but in reality, they carry with them a strong rationale, a strong impact, a strong concept. Thanks to all these programs throughout the years since our inception, we have been able to support more than 1.8 million SMEs in Europe, which in turn generate more than 6 million jobs, actually. And how, from the technical standpoint, how do we channel, how do we ensure that these policy goals of the European Union are translated via financial instruments to the market? Well, indeed, via delivery mechanism that in our particular case liaise on 2 main business lines. On the credit spectrum, we offer portfolio guarantees, both capped and uncapped, but also securitization, but also debt funds. On the equity spectrum, we support private equity, venture capital fund, technology transfer vehicle, business angels, and so on and so forth. So far over the years, we were established in 1994. We have built a strong network of partners, more than 600 funds and more than 400 intermediaries that are operating in the lending space. And it is against this background, this infrastructure that we have built, both on the, let's say, breadth side, so on the horizontal side, but also on the vertical side when it comes to specific policies, innovation, competitiveness, social enterprises, blue economy, artificial intelligence, blockchains, cultural and creative industry, and so on and so forth. It is against this background that we are going to, let's say, look forward to the next funding period. Thank you.
Thank you, Silvia. Very impressive and a very broad array of activities that the European Investment Fund is covering. Let me now turn to our next panel member, Lola Merveille from BPI France. Lola, the floor is yours.
Thank you very much, Astrid. Good afternoon, everyone, and thank you for inviting me to this event. So my name is Lola Merveille. I'm head of BPI France Liaison Office to the EU in Brussels. BPI France is the French public business bank, which supports companies at all stages of their development, from startups to large caps, let's say. BPI France support is first and foremost financial through a wide array of solutions, from grants to equity, including loans and guarantee. But it also a non-financial support through advisory services to companies. In terms of organization, BPI France is a group structured around 3 branches: a bank, a private equity management company, and an export credit agency. We are local based with regional offices, and our total balance sheet is above 75 billion euros.
Okay, thank you very much, Lola. As you can see in the audience, we have panel members who bring very different perspectives to the area of access to finance. But before we enter into the debate and the questions that you may have, I would like to announce a special guest for this panel, Mr. Peter Wasdorp. Wasdorp is the SME envoy for the Netherlands and has a strong interest in access to finance. Peter, welcome very much to this panel. Can you please introduce yourself and provide your views on the financing needs of SMEs in Europe? Peter, the floor is yours.
Thank you, Astrid, and I'm happy to be in this panel and joining you. I'm Peter Wasdorp. I'm the Director of Entrepreneurship Policy in the Netherlands, Ministry of Economic Affairs and Climate Policy. I'm also the SME envoy for the Netherlands. And as such, within the SME Envoy network of the European Commission, I'm the rapporteur on financing. And that's because financing is the key. SMEs need financing. Of course, they need a good business plan. They need entrepreneurial capabilities. They need good people, human capital, etc. But most of all, they need financing. And at this point in time, we are very vulnerable in Europe about financing. Astrid mentioned the numbers in her introduction. Equity financing is rather underdeveloped in the European economy. And even so, even less entrepreneurs make use of equity financing. And that's a bad thing, because we need those companies, especially high growth, innovative companies. We need them to find our way out of the recovery. They are our agents of change. They lead the recovery. So we have to invest in improving access to finance. And that's why I'm very happy with the call to action, which was presented by the SME Info Network, which calls upon improving access to finance through the member states, the institutions, to improve access to finance, especially for high growth companies. Thank you.
Okay. Thank you very much, Peter. That was strong encouragement and a passionate call for more equity finance in Europe. You mentioned that we need more of it, we need more scale-up investments. And therefore, I would now like to turn to Rudy. Rudy, we understand you're very much interested in the support of startups and scale-ups through risk capital. And one of the activities that is announced in the SME strategy is Escala. Can you tell us more about this initiative and also tell us how it can contribute to the creation of a more integrated European capital market?
Yes, thank you, Astrid. I will try to do so, but I want to start with two figures because Peter was speaking about high growth. And we always say, Europe, we are lacking behind. I would say yes and no. If I look for the last 10 years, the number of venture capital startups, so venture capital backed startups, we are in Europe at 36%, United States 45%. So we don't have to be ashamed. And I think a lot has been done. The problem is that our startups, and I'll come back what Peter is suggesting, they don't scale up. And if you see, so we have 36% the last 10 years of venture capital backed startups, we have only 14% of scale-ups. And there, Astrid, I'm even including United Kingdom. If I were to deduce that, we only have 8% left. So you see, the big issue, it's no longer startups because a lot has been done. I would even say that the startup gap has been narrowed. Thanks to what the Commission does, thanks to what's done by European Investment Fund, thanks to public banks such as BPI, I think a lot has been invested in startups. So then I think we are closing slightly the gap with, in fact, United States. So the gap today is scale-up gap. And if I speak about scale-up gap, I mean companies that have revenues already, which is a very important condition. They have revenues. I'm not speaking about starting companies having no revenues at all. They have revenues and they're looking for something like 15, 25, 30 million euro. That's in fact where we have the big gap. And those companies, and that's my second data for today, those companies we see, and for those who had followed the previous workshop, we had some examples of companies leaving Europe. 45% of the companies born in Europe, 45% are bought by other companies or leave Europe in order to find what they call the big tickets. So for me, for the next 7 years, the big issue will be how to narrow that scale-up gap, and that's in fact what we should try to do. So if you speak about the scale-up gap, what is the reason? Because people might say, yes, but we are swimming in the money. Interest is even negative. The money is there. Yes, but it does not go to this kind of venture capital funds. An average venture capital fund in Europe, it's now 60 million euro. With 60 million euro, you do not put 25 million into one company. And this is in fact where the big issue is. So what you have to do, you have to make these companies and these funds bigger by, on the one hand, doing investment schemes such as BPI, EAF, KfW, etc. But on the other hand, and then I come to your question about Escalar, Escalar is quite innovative because it says to the venture capital funds, so for the entrepreneurs in the room, we focus on the venture capital funds. Venture capital funds that do invest in scale-up companies. So that's the topic and the target. If they invest in scale-up companies, we say, because you need big tickets, we can double your investment capacity. So a fund of 60 million might become a fund of 120 million. Not by giving more public money at the same conditions, but giving what we call quasi-equity. It's equity, but it's almost, because the return is capped. It means if a fund is very rentable, they only have to pay a part to it to what the Escalar funds is, which is kind of B shares. And in kind of this goes bad, well, we are paid back first. So this means that for a fund, we wanted to test or they're open. We did the pilot scheme together with your investment fund. There were 88 candidates, so this means the funds are open. So I think the future will be, first of all, that we do fulfill the call of action from Peter, saying, let's make Escalar mainstream for the next period. But the second dream would be then that we try to finance Escalar not only by public funds, but by private funds, such as pension funds, such as insurance companies, because this way we make them invest in venture capital funds while we cap the risk for them, and so that will be a way to mobilize those funds. So that, I think, will be the dream Peter should put together for the next 7 years. Thank you, Astrid.
Thank you very much, Rudy, for all of these explanations. So it seems that the pilot scheme that was launched earlier this year is doing relatively well. You talked about an interest of 88 funds. That seems to be a quite significant number. And yes, I hope we can certainly take this type of initiatives forward under the recovery funds. So now, to get a slightly different perspective on the issue, because Escala, after all, is supported by public funds, I will turn to Rika. Rika, your company is a perfect example of a newly emerging player in the market. One of the objectives of the SME strategy is to reduce the over-reliance of European SMEs on the banking market. How does your organization contribute to this goal?
Very good question. Thank you. Not even the over-reliance is the biggest problem. Well, actually it is, since when we're talking about the startups and growth companies and their ways to access the finance is not going in actually to banks even, because as we know that they basically, in the early stage, they cannot have even the loan instruments what the banks are offering. So what we are doing is we try to offer an alternative for the phase where you actually need a growth money, and before the VCs and before you actually can go into the banks. And since the company life cycles goes in, when you establish your company and you go basically friends, fools and family, and you put your own savings into the company. But after that, when you actually need to prove your company's capability of doing stuff and everything, and you need the money, and there is no options at the moment that much. And especially if you are a startup or growth company in a small country like Finland, for example, and you basically don't know anyone, you don't know the business angels and the relevant people who could invest in your company. And that's where we try to come in, and we try to offer the alternative for that phase. So what we are doing is that we offer the quality company shares, for example, to be bought by big investor base, and they are business angels and they are wealthy private people and stuff. And so what we try to do is we try to give a not easy, of course, it's not ever easy to get the funding, but somewhat easier way to access the finance.
Okay. Thank you very much for these explanations. I said earlier, the banking sector very much operates along national lines. Your company operates cross-border. What are the advantages and the disadvantages of such an approach?
Well, just for us as a company, of course, is a big advantage that we can expand our business and scale our own business. But for the companies, the client companies which we operate with, is the biggest advantage is that, for example, when they are doing a equity round and they are perhaps planning to expand in Germany, for example, where we operate, and we always market the rounds as well. So basically, when you are doing an equity round, it's not only raising the funds, but it's also about the visibility. And so basically, when you are after the round and you try to go to Germany and you already have audience in there, because now where we have just recently started the business in Germany. So in that sense, we don't have like really big audience in there, but eventually when we are trying to grow the investor base, there is big audience already for your business. So the visibility is, of course, the biggest advantage for the client companies of ours. Disadvantages, of course, you then have to operate cross-border and perhaps, well, I don't see it being a disadvantage even. Just, you have to prepare to communicate English, for example, but that's basic stuff for basically every company. But not that much disadvantages in my mind at the moment.
Okay. How easy is it for you? Thank you very much, Rika. How easy is it for you to engage with SMEs and make yourself known? What are the barriers you're encountering, and what do you think could be done to eliminate such barriers?
Well, here in Finland, where we have been operating several years now, it's somewhat easy to engage with the SMEs since we're known here. But then what we have noticed is that when we, for example, in Austria, where we operate also, to be able to raise funding publicly means that the company needs to be AG. And majority of the companies in the SME, the growth sector, are actually the GmbHs. And basically, it would mean that the GmbHs would need to transform the company structure into AG, which is not that easy process. So that's one of the biggest issues, is that yes, they might know that we exist, but we cannot help them if they're not returning, if they're not turning the company structure into AGs. And that's something that I would love to see in the future to be changed, is the national corporate laws to be that they could help the SMEs actually to access the finance more easier than with all these kind of changes. So that's one. And for example, the prospectus limits is something that Finland is quite liberal in this. The access to finance is somewhat easy here, and the prospectus limit is 8 million. But when we go outside Finland, then it's starting to be 2 million, for example. And doing a prospectus after 2 million, if you're raising more than 2 million, is done publicly, and then the process is quite heavy and expensive. So many companies need to pass these kind of alternatives then if they need to raise more than 2 million, because they're not willing to do the prospectus just for the 3 million, for example, if that is the need. So my suggestion is that the member states, actually the policymakers, would look the corporate laws that they are more SME friendly, is my suggestion.
Okay, thank you very much, Rika. I take it you would like company laws to be changed, to have simple measures at European level that make it easier for SMEs to change from one company format to another, to enable raising funds. And I also take it that you would very much welcome if certain limits for prospectus would be adjusted to be much more SME friendly and to make fundraising much easier. Thank you. I think we should now turn to Silvia. Silvia, in my introduction, I outlined that the Commission actually would like to see much more of the financing to go towards EU policy priorities linked to the Green Deal, so green tech, deep tech, blue economy, also financing of space technologies or gender smart aspects. Could you tell us a little bit how the EIF can help us achieve these policy objectives?
Absolutely. Thanks a lot, Astrid. First of all, I would like to say that when looking at this next funding period and these policy priorities, I think there are three important dimensions that will be the foundations of the next generation of financial instruments. First of all, the financing innovation will continue to remain a must in order not to lose the breadth of the market that we have collectively built with our partners, with you, with the EIB, and so on and so forth. Second, there is, I believe nobody can deny that there is an increased focus on sustainability, impact related, and also a human capital type of topics that should be also taken into account when designing instruments. And thirdly, we are seeing at the same time a logical progression towards financing of more targeted form of interventions in the sectors that precisely you have mentioned, that are also of the strategic importance for the European Union. So even if we looked at the recent survey that the EIF has conducted amongst the portfolio of VC funds, we actually see that the fund managers are also oriented the origination of their portfolio towards sectors such as blue economy, such as space, such as artificial intelligence, and so on and so forth. Not to mention also the fact that, to build on Rudy's point, that the success that we indeed got under the Scalare initiatives, given the very high level of demand, certainly certifies the need in the market for this novel approach. So all this to say that I believe that the way in which we will be focusing on the EU policy priorities would be, or could be actually clustered, let's say, in four key dimensions. So on one side, we have, of course, the innovation and the digital. And I see very much the call to action that we have received indeed today, where indeed Europe is a fundamental source for this innovation, for these strategic technologies. But the fact that also in the scale-up phase, we are not able actually to support them appropriately, it means that there are some flaws in the system. So focusing on strategic technologies, focusing on the scale-up, focusing on the innovation and the competitiveness will certainly be at the center of our design, and we are actually willing to act upon this. Second, you mentioned indeed the importance of the Green Deal. Now, I don't have time, of course, to go into the details of each and every point, but just to give you a flavor, for instance, on the Green Deal side, what we aim to do is leveraging on our existing skills, infrastructure, and network of partners, and obviously the learning curve. We aim to implement a kind of green toolbox under the various upcoming programs to de-risk, for instance, transactions in the green economy, with intervention that might range from the green energy to clean, safe, and smart mobility, energy efficiency, innovation in clean technologies. On the equity side, for instance, investment in climate and environmental solutions through venture capital, private equity funds, including environmental impact funds, funds focusing on clean technology, blue economy, and so on and so forth. And if I also maybe look at the overall need to ensure a proper functioning of the VC ecosystem, we cannot, of course, disregard also the challenges of the VC ecosystem. For instance, one of the most striking one is the exit environment. And in general, we recognize that the late-stage financing environment in Europe remain, to a certain extent, underdeveloped. So recognizing the importance of developing a well-functioning European IPO market, we are actually looking at ways to stimulate also investors in this area. You actually mentioned, Astrid, about gender financing. Indeed, as we all witness every day, literally, in the social media or in dedicated channels, we are confronted with some discouraging data about financing to women-led funds or women-led enterprises. When looking at the EF portfolio, the comparison between, I only have 2013 and 2018 data, the comparison of the VC portfolio is actually encouraging, because we are moving from a 19% of the portfolio with at least one female partners to 30% of the portfolio with at least one female partners. However, a lot must be done. And on our side, we are, of course, looking at this area with a special, let's say, attention. And in our thinking, there are three key dimensions that, in our view, will be key in order to succeed in this challenge. First of all, focusing on enabling awareness, so promoting and showcasing vis-a-vis the women VC communities to show that possibilities are actually there. Second, of course, design financing instruments that might attract this type of VC community. And third, focusing on empowering networking opportunity, technical assistance, and capacity building. Now, all this to say that my personal view is that we will be successful overall in the endeavor vis-a-vis the EU policy priorities if we apply what I call the 4P recipe. First of all, products. One size fits all, we know that it doesn't work. So we need to continue ensuring this full spectrum approach, that we have implemented so far, moving from the very riskier and early stage of the market up to the more expansion and growth development stage, so to offer tailor-made solutions for the various market segments. Second, people. Of course, we do need expertise. The expertise is key, and is also key to ensure that we could equip, let's say, the intermediaries and in turn the portfolio companies with the right skills. So with the right capital, of course, on one side, but also with the right skills in assessing the underlying business models, particularly when we are talking about an asset market. I do work in the social impact field, and I can really touch with hand this need. Second, perception. This is, I think, a point which is really close to all our heart, in the sense that one of the most important criticism that I face also when I join some conferences, that sometimes the EU tools, well, not sometimes, the EU tools are there. And I tried to convey in my earlier message, are there for a variety actually of sectors and in a variety of geographies, either at pan-EU level or at specific national or regional level. But sometimes we do miss the right awareness raising, the wide promotion, the wide communication. So in my view, in order to achieve future systemic change, we need collectively to focus on that. And this collectively means not only the institutions that are at the source, at the origin of that, so the Commission, the EIF, the EIB, the MPIs, but also, for instance, SME associations and so on that could help us channeling down this information so that the awareness gap is reduced. And the last 4P is, of course, passion, because without that, we were probably not even sitting here today.
Thank you very much for this, Silvia. Very inspiring. So, as you know, we actually do have a lot of SMEs in the audience. You talk about the EIF, working with financial intermediaries, but what does that actually mean for SMEs? How do SMEs find out where they can get the adequate finance? What do you tell them? What do they have to do?
So concretely, on the EIF website, we do have dedicated sections per country where we list the intermediaries we work with and they benefit from the EU funding. So an SME should therefore, if it wants to know what are the intermediaries and what programs are active in a given country, then it should go in the on the EIF website and look for the country map where we are able to list all these intermediaries. At the same time, the European Commission has put forward this fabulous map, the Access to Finance, where actually the location, let's say, of these funding opportunities are also displayed. On a monthly basis on our website, we also publish indeed this list of intermediaries that are working with us on a number of programs, ranging from the guarantees business to the equity business. So we try actually to channel down this information. And on top of that, what we have been trying to do over the past years at the EIF is also to increase the communication with the more maybe simple language, with more appealing channels in order to inform the audience, even though we don't talk directly with SMEs, but ultimately supporting these SMEs in these various sectors, it is actually our objective, of course. So my encouragement would be indeed to visit the EIF website and look at the countries that we are serving, look at the intermediaries that we are serving with the product, and in case of questions, there are all the necessary contacts to reach out.
Okay, thank you very much, Silvia. I would now have a question for Lola. Lola, one of the crucial elements to support SMEs to make them more resilient and future-proof is to help them with digitalization. After all, we experienced with the onset of the COVID crisis that being digital is of key importance. Can you tell us what you are doing for SMEs today to support them in their digitalization efforts? And what are the challenges that you may be encountering?
Absolutely. Thank you, Astrid. Indeed, I mean, BPI France has been supporting SME digitalization efforts for a long time through various instruments, grants, loans, equity, advisory services. But there was one piece missing at the time. It was the guarantee, national guarantee to embark the banking ecosystems in financing digitalization. This is the reason why we signed earlier this year, together with the Commission and the EAF, the first pilot program for digitalization under the COSME facility. And this is a guarantee program that aims to facilitate access to bank loans for small companies willing to undertake digitalization projects. This is more precisely a portfolio guarantee, which goes up to 80%, that will cover loans of maximum 50,000 euros at very favorable financial conditions. So the program is really targeting very small companies and small bank loans, because the challenge of, let's say, performing digitalization process, including others, are much higher for very small companies. So through this guarantee, our objective is to cover a total loan portfolio of 750 million euros. But as you rightly mentioned, there are challenges that we face. I would say that there are two main challenges. First of all, one that I would call the SME readiness challenge, because opportunities of the digital transition are insufficiently perceived by companies. According to a BPI France survey, 87% of enterprises do not consider digital transformation as a priority. In addition, there are organizational barriers. Among companies that want to perform their digital transformation, 63% of them have not prepared a roadmap to achieve it. And why? Simply because digital transition is much more than digitalizing tools and processes. It is actually a new way to create value by reassessing one's business model in a digital context. Therefore, it calls for a global transformation of the company that addresses its organization, its customer and partners relationship. The second main challenge that I see is the bank's readiness challenge in financing the digital transformation of SMEs, because financing non-tangible investments remain a challenge for the banking sector, of course, and also because there is a lack of digital culture and knowledge of digital investments among the banking ecosystems. So we hope that, and we actually believe that the program that we have launched with the Commission will help to address at least part of these challenges.
Okay, Lola, thank you very much for that. As you know, we always talk about the twin transition, so digitalization, but also the sustainability aspects play a very important role. Is BPI France already supporting SMEs to help them towards more sustainable business models, or are you planning on doing that in the future?
Yes, absolutely. And actually, we like saying that BPI France is a climate bank in France. Today, BPI France finances a sustainable project for a total amount of around 2 billion euros a year. And through, again, many financing solutions. But our objective on the short term is threefold. First, to triple the amount allocated to the green transition over the next 3 years. Second, to implement a new strategy supporting portfolio green transition. This means adapting our financing conditions to companies that also take into account their business model and capacity to embark in this green transition. So we have to really reconsider the way we provide loans, for example, or equity, so as to incentivize companies to make an effort in their green transition. And last but not least, our objective is also not to leave anyone by the side of the road, meaning that we cannot say as from tomorrow we will do green investment only and let the others by the side of the road. The economy today is not green, and it will take time and a lot of money to embark everybody and companies in this green transition. But we are very optimistic and very, let's say, committed to make this possible on the medium term.
Thank you very much for this, Lola. I think it's now time to turn to questions we have received from the audience. I'm having a look. So it's now 17:26. We have roughly 20 more minutes left for our panel. And Rudy, I see that the first question is being addressed to you. So there's a question to you from Gerhard Thümer from SME United. And it says, I fully agree that a lack of available finance is a reason for lagging behind as regards scale up in Europe. However, speaking with startups, they also tell us that next to access to finance, it's also more costly and time-consuming to scale up in Europe compared to prosperous markets. This is due to 27 tax and insolvency regimes, 27 different consumer and labor laws, and differences between member states when it comes to the implementation of EU directives. Do we also need progress as regards deepening the internal market to succeed with scale-ups? Rudy, you have to unmute yourself, I think.
Okay, now I think I'm unmuted. Gerhard, you're right. If you look to why do companies in Europe don't scale up, there are two reasons. The one is indeed the fragmentation of the market, where you refer to. And if you look to the fragmentation of the market, of course, there's the single market achievement, which is still going on, tax holiday, and so on. And the second one is finance. So I thought, what you think, that the main reason would be internal market. Well, we've done two surveys. One was done by a consultant, Roland Berger, which you know quite well. Well, he or this consultant's office arrived at 95% considered that the first thing was to find money. So if you go to the United States, you don't go for the market, you go because the money is there. And we did a study with the University of Ghent as well, which is quite amazing, that companies go where the money is and not vice versa. So you might think that what is mobile is the money. No, it's the company that goes there. So, and we did a second survey together with DG Grow, did a survey there on SME Observatory, where I think SME was involved. And there we came at a figure of 65%, who says that the main obstacle was financing. So I agree with you, we should have two-track approach. One, coping with the big tickets, the 15 to 25, and at the same time, of course, work on the single market. And I think if you could do those policies at the same time, this would be the best way, because, you know, we have in Europe, we have technology, we have talent, we have people with vision. So the only thing that's missing is fragmentation of the market and big money.
Okay. Thank you very much. Yeah, I see you're quite popular because I actually have a number of questions from the audience. So there is one from Chris Boschmans. He says, I very much like your intervention in reference to institutional investors. That is where the money is and where they are looking for investment opportunities that yield decent returns. So far, however, they generally do not invest directly or indirectly into SMEs. Will Escalade make a difference in this respect, in your opinion? If not, What could be done more to entice pension funds or insurance companies to invest in SME assets?
Well, I think the first was the question. I should appoint him as ambassador of Escalar, because this is exactly what Escalar is about. We see, and I make exception of the country of Peter, but almost all other countries, pension funds do not invest into risk capital. Why not? Because it's too risky. It's a bit of contradiction. And so, in fact, what we want to do with Escalar is try to convert a risky investment into a covered investment. It means, I didn't want to be too technical, but the part of Escalar in a fund is less risky. Because it's less risky, you could convince pension funds and insurance companies to invest. So that's what you want to do, together with, of course, the company of Silvia, the European Investment Fund, to see if after the pilot scheme, we can find ways to mobilize those pension funds. And we had first contacts, and these first contacts are quite positive, because today they're looking to, people are swimming in the money, so they're looking to put the money somewhere. So if we can give something where they have an almost guaranteed interest and we cover the risk, then we can mobilize those funds. And if we can mobilize those funds, well, we can be as big as the United States, and hopefully in 7 years' time, we can start by saying that there's no more scale-up gap. But what you, in your question, you're exactly pronouncing or identifying the philosophy you want to achieve with Escalar. But in the pilot phase, we were not there, because in the pilot phase, we first wanted to see if venture capital funds are open to this quasi as financing, as we had 88 requests, which is unexpected. We see that the venture world is open. Now we have to sit together after 2021 to see if we can do something on the other side of the balance sheet and try to collect private money, because that's the second big problem in Europe. Everything what happens, BPI is very, very big, EAF is very big. I would say we are almost too big. And we should now, the next question would be how to trigger private money through public money. And we need to increase the trigger effect.
Okay, thank you very much for this, Rudy. So I understand, first of all, in Escalar, what do? We test a new concept with public money. We try to see how the private equity market reacts to it. And first indications are quite positive. Then the second objective is to build a decent track record to show that our public money that we invested actually brings return, so that we can convince pension funds, insurance companies to come in. And then thirdly, in the long run, hopefully the market starts taking care of itself without our intervention.
Perfect summary.
Okay, cool. So let me now move to Rika. Rika, we have a question to you, and it's from Rudy. The question is, do you have funding opportunities for companies, especially startups outside the EU region?
Yes, actually, yeah. Our license is valid in European Economic Area. So basically, yes, within that region, yes, we are valid. We can operate, but not outside the Europe. So basically, we cannot take cases from China, for example. We cannot operate in there, but within the European Economic Region, yes. Okay.
And also for you, I have a follow-up question. Mm-hmm. And it is from Eogan Richardson, Ministry of Enterprise, Trade and Employment, Ireland. He writes, seed and stage A funding has been dominated by public funding for many years. Private funding was increasing, but has retrenched with COVID and protectionism. How can we see more private finance, like you are raising, come into more countries in the EU, especially smaller countries? So in other words, what are your expansion plans?
Good question. Yeah, I was actually thinking, since the corona and the pandemic crisis has, the investors are looking for the domestic companies, of course, because the domestic companies are creating the jobs. But as an investor, I would look at the Europe as a whole economic region. Since if companies in Finland, for example, Finland is living from export, so we are kind of dependent that we can still, export things from here. And if every member state are doing good or doing well and creating more jobs, it helps everyone. So I really hope that the investors keep this in mind as well.
Okay.
Was this the answer for your question? If I understood it right.
No, I think that's sufficient.
Good.
Now we have a question for Lola. Lola, it's a question from Chris Boschmas. He asked, how successful is the self-diagnostic tool of BPI France to measure the digital preparedness of SMEs? Digitalomètre, apparently it's called. Would this be something that you would recommend similar organizations to adopt?
Yeah, indeed, we have set up this diagnosis tool, which can be, performed online by companies. It's aimed, to give a first idea to the companies about their digitalization readiness. So basically, it's lists a series of questions, very precise about what they do, what they do not do, what they are ready to do. So it has to give them a score on how ready they are to start digitalization oriented, let's say, investments. So it has been a very successful tool because we have been using it also for other type of business development matters, for example, internationalization or even the green transition. It's a very, let's say, SME friendly tool to give them a first idea about what it means, to embark in a digitalization investment project. So, of course, we will recommend this tool to other NPBIs as it is not very costly to put in place, and that it gives a first idea, a first flavor of to companies about what it means. So, yeah, we are happy with it.
Okay, thank you very much. And just a little bit of encoding, you used the abbreviation NPBIs. Maybe some people in the audience are not familiar with this. So that stands for National Promotional Institutions, such like BPI France or KfW in Germany. So I now have a question for Silvia. And it's a question from Agnes Mattis. She's asking, how can social economy enterprises, such as cooperatives, benefit from the instruments that you describe?
Thank you for the question, which is actually my domain. I repeat the fact that we don't support companies directly, but for social economy enterprises, but more largely for social enterprises, or also, as we call it, impact-driven enterprises. So enterprises that they have at the core of their business model the achievement of measurable, positive, and intentional social and or environmental goals. We do have a full array, let's say, of instruments, building on the full spectrum approach that I mentioned at the beginning. So in this area, we have CAP guarantees with the program EASY, Employment and Social Innovation Program. We have loans, senior and subordinated loans, still to financial intermediaries who in turn should on lend to this kind of enterprises, still under the EASY program. We do have equity investment under the FC facility that are supporting via different pilots intermediaries linked, for instance, to incubators and accelerators, so focusing on the very early stage of the market up to the well-established impact venture capital funds. Once again, what is key is, first of all, on the company side, to be eligible, as we call it with our terminology. That means respecting the criteria that would make a company eligible for a specific facility. Based on my experience and looking at maybe the portfolio of EASY, indeed, cooperatives and other type of social economy enterprises are potentially eligible under the definition of social enterprises. So concretely, what you should do is to go on the EIF website, look at the EASY program, which in my view is probably best fit for this type of enterprises, and look at the definition of social enterprises. If you think that you qualify, then you might want to access the respective financial intermediaries in the countries where you are operating. Of course, then I should add this caveat, the selection and the checking is based on the financial intermediary processes and procedures. But just to give a first indication about how one should maybe become acquainted with this program.
Okay, thank you very much, Silvia. So now I personally have a question actually to Peter. Peter, you are the SME envoy of the Netherlands. And we know that a significant amount of the recovery funds, namely the so-called recovery and resilience facilities, will be implemented by member states according to their own plans. We also know that the member states are currently in the process of drawing up their national recovery plans. And I was wondering if you, as the SME envoy, if you're involved in the process, and maybe you can give us a sneak preview on what the Netherlands are planning in terms of access to finance support for SMEs.
Thank you, Astrid. Well, I can tell you a little bit more about that, but of course it's highly confidential. So it's only the few of us who are attending this meeting right now. But I'm only kidding. As Rudy has said, we have to narrow the skill-up gap. That's the main objective, and there is no silver bullet. So we need a vast array of instruments. You need to build the ecosystem. We need to work on regulatory framework, strengthening the single market, but most of all, we need smart financing instruments. We need to leverage private funds, institutional investors, pension funds, etc. So we need to cooperate with public and private money. And that's why the Dutch government last week announced a big scale-up investment program. Together with InvestNL, which is the Dutch version of BPI France, the Dutch government announced a 500 million euro investment program for scale-ups. Also, European Investment Fund announced it would add to that amount 150 million euros. So that's 650 million euros from the public side to leverage with private money to invest in scale-ups. But not only in scale-ups, but also in a more diversified financial landscape. Because as Astrid has mentioned in her introduction, the European financial landscape is dependent on banking and not so much on non-banking. So equity finance is one aspect of non-banking, but also other forms, for example, crowdfunding, lending, peer-to-peer financing. So a part of this investment program will be focused on a more diversified landscape. Another part will be focused on setting up a deep tech investment fund, especially focusing on these technologies where we have a need in Europe, where we have a lot of potential, but where companies in those deep tech areas, they move abroad, they move to other countries outside Europe. And that's a pity. Not for them, of course, not for the individual entrepreneurs, which is good for them. But for the European economy, it's a pity. So that's one of the reasons we set up this. We are in the middle of setting up this deep tech investment fund. So this is not a sneak preview about the recovery funds and programs, because the government is still discussing that. But this was announced. The government will invest 500 million euros in a scale-up investment program. EIF will put another 150 million euros in addition to that, so we can leverage public and private money to narrow the scale-up gap.
Okay, thank you very much for that, Peter. That's a very encouraging investment, and also the numbers are quite impressive. I'm thinking that 650 million will be put to work in this particular area. I think is very welcome. Unfortunately, ladies and gentlemen, we are now coming to the end of our panel. I would like to thank all our panelists for being with us today, for sharing their insights. And specific thanks also to our special guest, Peter Wassendorp. We have now heard how important it is that we join forces and work towards the common goals of the SME strategy. We have received plenty of information how European finance support should be structured. Now all we need to do is to put the recovery funds to good use. And with this, I would like to thank all of you, close this panel, and wish you a very pleasant evening. Thank you very much, and goodbye.